What's going on, everybody, and welcome back to the channel. So in today's video, I'm going to be talking about Cloudflare stock and covering their most recent Q3 earnings report. Now, full disclosure, I do have a pretty big position in this company, and I will try to keep this video as unbiased as possible as we go through the Q3 earnings and also the valuation of the company. Now, in addition to the Q3 financial results, I'll also be talking about some key slides from their investor presentation, as well as comparing the valuation of them to their biggest competitor, Fastly, to see really which stock is the better buy right now. And if you guys want, I will leave some timestamps in the comments section so that you can easily go to each segment of the video. And also be sure to smash that like button if you're already invested in Cloudflare or if you're thinking about starting a position. So with that, let's get into today's video. So before getting into the details of these third quarter earnings, this was a big milestone quarter for Cloudflare as they finally surpassed $100 million in revenue, grew to more than 100,000 paying customers, and released more than a dozen new products and features. And on top of that, they also provided their services to state and local governments to make sure there were no cyber attacks to disrupt the election this year, which is obviously a big deal, given the drama and controversies that seem to happen every election now, especially when it comes to foreign influence. And this really summarizes a great quarter for Cloudflare as they continue to sustain this high revenue growth and user adoption, which we'll get into now. So total revenue for the quarter came in at $114 million, which is an increase of 54% year over year, so definitely strong growth. And GAAP gross profit also came in at $87 million, which is a big increase from the $57 million in Q3 of 2019. But the numbers that we all care about is the net loss and free cash flow, because at the end of the day, we want to invest in companies that are profitable or at least on their way to profitability. So for Q3, Cloudflare took a GAAP net loss of $26.5 million and a non-GAAP loss of $5.7 million, which is definitely a good sizable amount. But if you look at the way their net loss is trending, you'll see that their GAAP net loss in Q3 2019 was $41 million, which is almost double what it was this quarter. So they are clearly working hard and fast to become a profitable company, which we will get into later in the video. Now, unfortunately for Cloudflare, they are not free cash flow positive yet, which is one of the reasons why they can't turn a profit, but their free cash flow is also trending in the right direction, with their cash flow being negative $18 million versus negative $34 million in 2019. Now, the last thing to note from the financial overview is that they do have just over $1 billion in cash and short-term investments, which is more than enough cash to fund their growth while getting them closer to profitability. So that was really just a high-level overview of some of the key financial metrics from the third quarter. And before moving on to the valuation metrics, I do want to cover just some key metrics that were in their Q3 presentation slides, because I believe that some of these metrics are crucial to understanding what kind of future growth Cloudflare can see moving into 2021 and beyond. So in Q3, Cloudflare saw their number of paying customers grow by roughly 25% to more than 100,000 customers, which is a huge milestone for them, because without the growth in paying customers, there is no growth in revenue. So the fact that they are still seeing double-digit growth in this metric tells me that revenue growth will continue to grow at well over 20% for the foreseeable future, especially as existing customers continue to pay more than the previous year, with a dollar-based net retention rate of more than 115% for the last 10 consecutive quarters. And in case you don't know what this means, in simple terms, imagine you have a customer that pays you $100,000 this year. At a net retention rate of 115%, that same customer would pay you $115,000 the following year. So this is definitely a good metric to keep in mind when thinking about what revenue growth is still left in this company. Now, one of the other factors that I believe will play a key role in their future growth is the number of large customers, which are those that account for more than $100,000 in annualized revenue. So in Q3, we can see that this metric grew by more than 60% and now sits at 736 customers, which is a massive improvement from the previous year. And it's really metrics like these that keep me bullish on Cloudflare, because these are the reasons that I believe they will continue to show strong revenue growth in the future. Now, the last slide that I want to cover before moving into the valuation metrics is their path to profitability, because like I said earlier, earlier, we all want to invest in profitable companies. So we can see here that they have outlined their long-term targets for key financial metrics that will help them get to profitability. So in Q3, we can see gross margins remained at about 76% and hasn't really changed much over the last couple years, so this is really nothing new to us. However, sales and marketing expenses did drop to 45% of revenue, which is less than previous years, but is still far from their target of roughly 28%. And to be honest, I'm perfectly fine with this because I do want them to continue acquiring customers and growing their user base, so this doesn't really bother me too much. Now, the bottom three metrics are the most important because these saw the biggest drops, with R&D dropping to 21% of revenue versus 27% last year, and this does put them much closer to their target of 19%. Now, I wouldn't be surprised if we saw this increase moving forward as we move out of this Rona era, because I'm sure they are just reducing their expenses just given the economic uncertainty that we're all facing. And if this did rise, I'd also be fine with that because obviously I want them to expand their product offerings and continue innovating on existing solutions to make them better. So we'll just have to wait and see what happens with this. Now, general and administrative expenses did drop to just 16% of revenue, which I believe again is due to the Rona, as almost every company has had to cut their overhead expenses, all in an effort to preserve as much cash as possible. And this is one metric I actually expect to remain the same or decrease, because what the last year has showed them is that they can meet customer demand even with this reduced staff. So why would you increase your overhead when you can function at a high level with the reduced overhead? And this does put them significantly closer to their long-term target of about 9%. Now, the last metric is their gross profit margin, which dramatically got better from last year's negative 25% to just negative 4% this quarter. So this shows us as investors that they are moving in the right direction and are trying to become profitable while maintaining their strong revenue growth. And personally, as an investor, I love when a company shows us what their path to profitability is, because it gives us a way to measure whether or not they're actually on that path or if they're trending in the wrong direction. But obviously Cloudflare is moving in the right direction, and that's something that I love to see. So with that, let's get into the valuation metrics. So what I want to do for this section is compare some of the key valuation metrics of both Cloudflare and Fastly, because it's been a while since I've talked about these two stocks, so it's important to revisit this. So starting with the market caps of these two companies, Cloudflare currently sits at just under $20 billion, while Fastly is less than half of that at $8.2 billion. Now, what's different about these two companies and how their stocks have performed recently is that Cloudflare is in the middle of an insane upward trend, moving up more than 70% in just the last 3 months, while Fastly suffered a severe sell-off after their Q3 earnings and currently sit 4% lower than where they were 3 months ago. Now, obviously, this has affected their valuations in a massive way, and to be honest, it looks better for Fastly than Cloudflare at the current moment. When you look at the price to sales ratio, Cloudflare is trading at a 46 price to sales on revenue of $425 million, while Fastly trades at a price to sales of 28 on $290 million of expected 2020 revenue. Now, this would lead me to believe that either Fastly is severely undervalued or Cloudflare is extremely overvalued. And if I had to go with one or the other, as much as it pains me to admit this because I am a Cloudflare shareholder, Cloudflare just straight up looks overvalued at these current levels. And when you look at some of the other metrics like analyst 2021 growth rates, they both sit above 30% and are pretty much in line with each other. The current ratio tells the same story. They are both well leveraged with more than a 7x current ratio. So neither of these companies are strapped for cash or are debt loaded, which is obviously a good thing, especially when you're talking about companies that have this kind of growth expected. So as you can see from the valuation metrics, Cloudflare does look a little overvalued when compared to Fastly. But in my specific case, I have a cost basis of about $38 a share. So for me, this isn't really something that I'm looking to add to my position or sell. this is really just a strong hold for me. But one of the reasons that I like Cloudflare more than Fastly is because not only do I feel that Cloudflare provides a better product with more capabilities, but they have more diversity in their customer base, and this is actually one of the reasons why Fastly stock crashed so hard after their last earnings. Basically, Fastly had to lower their revenue guidance because their largest customer, TikTok, which actually accounts for more than 10% of their revenue, ended up not spending as much as they thought, and that's what you run into when companies rely too much on one company. So that's really a brief overview of Cloudflare's Q3 earnings report and also where their valuation stands at the current moment. So I hope you guys enjoyed today's video, and if you did, be sure to leave a like and subscribe to the channel because it really helps support the channel a ton. And there's a lot of time and effort that goes into making these videos on top of my full-time job. So to all of you guys that like and comment on all the videos, you guys are the real MVPs. And with that, thank you for watching, and I will catch you guys on the next one.